I'm here with Dustin Show and Dale Ellen Tenney. So today we're going to talk about bank statement loans. And the reason they exist is because some people who are self-employed make a lot of money and they just don't show it on their tax returns, or they haven't filed their tax returns because of delays. So hedge funds came up with, hey, we know that there's a lot of successful people out there with good credit that deserve a mortgage that aren't getting it. We're going to charge them a higher rate and package it up and sell it to a hedge fund, and investors are going to pay for it. So there's an appetite for bank statement loans. So there's 4 types of bank statement loans we do. There's 12-month business, 12-month personal, 24-month business, and 24-month personal. So the most common I use is 12-month business, because usually the personals, the people aren't depositing the correct amount the same way. There's too many deposits going in there that aren't really usable funds. So let's just start with the most common, which is 12-month business bank statements. So what we do is we collect 12 months business bank statements and we analyze the deposits. So if they see a cash deposit going in there, they're going to back that out. If they see a transfer from your personal account going in there, that doesn't count as a business deposit. So they're looking for real business deposits. Sometimes they ask for invoices to verify the deposits, especially in the most recent 60 days of bank statements you supply, because a lot of people are using those assets for down payment or closing costs. So what you do is you analyze these 12 months business bank statements, get a total 12-month deposits that you can use, divide it by 12, and you come up with a monthly number. Let's just make it 20,000 for now. So if you got $20,000 a month in business deposits, the underwriters have a 3-tier analysis of it. They'll use 30%, 50%, or 70%. And to get to the 70%, they usually want a CPA letter saying your expense ratio is 30%. Now, there's variations. Sometimes people have very little expenses. If you get a CPA letter, say your expense ratio in your tax returns is 25%, they'll use 75%. But let me let you know how they kind of analyze which tier you're going to be in. So let's just say you're a consultant and you're a one-man show, you work out of your house, you got no expenses, and you give people advice and they pay you money. That would be a 70% of your deposits that you would use. So for a $20,000 a month deposits, 70% of that would be $14,000. That would be your monthly income that they would go to basically 50% DTI on. So 50% DTI on 14,000 is 7,000 a month. That's
so Alex, the expense factor there is 30% in that example you just used.
Right.
Okay.
Expense factor is 30%. So you're going to use $7,000 for your mortgage payment, your car, your credit cards, etc. So that's the 70% one. Now, let's say you have a small business, you got like 6 employees, you got maybe a brick and mortar, they're probably going to err to 50%. And most of these bank statement loans, they will err to 50% without any CPA letters or any other follow-up questions, unless they see that you have a big company with lots of expenses. Now, so the less expenses you have, the more likely they're going to use the 50% without any questions asked. Now, the 30% one is more for products. And I'm going to tell you an example how I got burned. I didn't realize this. This was years ago, like when they first came out. This guy would buy Gucci purses that came off the Gucci line that had flaws, and he would rehab them and sell them. So he would buy them for $500. He'd put $50 into the repair and sell them for $700, and to put that $700 into his bank account. Well, $500 was to purchase the purse. So most of his deposits were the cost of goods. So when you have a cost of goods service job, they're going to use about 30. They're going to use 30%, and that's where you got to be careful of it.
Hold on, Alex. Can I jump in on that?
Sure.
I just talked to an underwriter about that exact example this morning. More eBay specific, kind of what you're talking about, right? Okay. Where you're buying and selling things.
Yeah.
And they will use a 50% expense factor now, 50. But they want to see certain things. They want to see obviously the bank statements, and they also want to get a itemized printout from eBay in my example, which shows the gross sales, right? So they can kind of match it up to the bank statements, but they'll use a 50% expense factor. They just closed one recently.
Yeah. So all these things are not set in stone. These are just general rules. So if you can show your cost of goods is 20% of your gross sales, you can get away with it. You're going to be able to get away with that. There's all sorts of ways to work around all this stuff with CPA letters or proof invoices for your sales and the cost of the goods that you paid for that. So there's all sorts of workarounds, but these are the general rules. So
Alex, let's go back to one other where you kind of start at the top. Let's say you're a self-employed individual, you don't have that many employees, you have, obviously you have a business account, but you're consistently transferring money into your personal account that's pretty steady. You can use 100% of those personal deposits as long as you can prove that you have a business account.
100%. So
So
I
if
was
you're
gonna,
paying yourself $10,000 a month,
yeah,
you're depositing into your business less
I
than 20,
yeah,
that's better.
I was going to
Go
address
ahead.
that. So the rule on that is if you've got personal bank statements and all your deposits come from your business account, they'll count 100% of your personal. They'll think that you have already expensed everything in your business account and you're moving it over and paying yourself a salary. Therefore, that is your salary. But they won't take any other deposits unless it's just from your business account. So they'll exclude all other deposits. So if you deposited a payroll, like let's say a customer paid you and it went into your personal account, they're not going to count that because it went right from the customer. It should have gone through the business account.
Right.
So they'll only use business transfers from your business account to your personal, and they'll use 100% of that. And you don't even need a CPA letter. Now, all these banks require, or all these bank statement loans require a CPA letter of some sort. A, to state that you've been in business for 2 years. B, what percent ownership you are. C, using the funds out of your business account's not going to hurt your business. D,
you don't have to be a CPA. It's got to be like an accountant, somebody from, that does your taxes. So just because it's a CPA letter, you don't have to get an actual CPA. Now,
if you're using expense ratio, I've found that it needs to be a CPA.
Right. Well, the thing is this. Okay. I got more important questions that I'm getting hit on recently. Is who qualifies for a bank statement loan? Okay. Now, 1099 employees, realtors, loan officers. How about a combination of W-2 and 1099 and a business? Or if you are self-employed, say a landscaper or something, and then your wife is a W-2, can you kind of detail those programs? Because some of them, they just call me or contact me. They want a bank statement loan. They're nothing but W-2, and they got a little side job doing e-commerce. You know what I mean? So there's a lot of these
there's a lot of variety, and I don't want to go over what the variety is. Some banks will do the wife that's a pay stub and the husband that owns a business. Some won't. Some only want the business owner on that loan. Some won't use multiple. Like some, when it comes to, like, let's say you have 5 rental properties. Some will hit you for the mortgage payment as debt on all your rental properties, and some will say, "Hey, show me 3 months of you collecting rent, and we'll exclude that mortgage payment." So there's a lot of variations of what.
Well, time out there. Okay, but I want us to hit on this because it's very important. Now say it's 5 rental properties. What if they have 5 different LLCs and each LLC has a bank statement? All right. Can we use?
No, you can't use 2 businesses on the bank statement loan. I've tried that. Now there might be an investor out there that
will refinance. A refinance of one property that's an apartment building that has a separate LLC. All right. He wants to, like say it's a 4-unit building. He wants to do a cash out refinance on that individual LLC. Can we just use that one bank statement, or does it all have to be combined?
Alec, can I jump in here and say something? You can use multiple businesses. I confirmed that today too.
Which bank? Oh, no, let's not talk about that.
You can use up to 3.
I tried it, and I was told no.
All right. Well, I'll share that with you afterward. Up to 3. I was told that today.
Okay. Yeah, I had a wife that had her own business.
So as Gus's example, if you have 3 LLCs with 3 different bank statements, I was told today you can do that.
All right. So again, these loans. So let me tell you another problem with these loans. So if you call us, you say you want a bank statement loan, and you tell me your story, I have to get off the phone and I have to call 10 investors and make sure you fit. Because what's going to happen is you're going to find out each one of these investors has one little loophole that you can't do your loan, but the other one has. So everybody does a little variation of all this. And on top of it, they all have different rates and different fees and points and all sorts of different rules. So you got to keep in mind, these things are very tricky. So what I do is I interview you, I get all the questions, and then I shop it around, and I maybe I can find 100 investors, maybe I can only find 1. But if I'm down to 1, I'm stuck with that one investor's rules, and I'll give you that rate quote. And that's where it gets complicated. So sometimes when you go for the lowest rate on these bank statement loans, you get a really bad process. So I like to pick a select few people I like working with, because these things become black holes in underwriting. You don't know, you don't talk to these underwriters, or they pull out a rule out of their hat that kills your deal. So these are very, very
All right, the
tricky.
the questions I'm asking is, these are questions from legitimate people that they
Right.
don't really have answers to. So I think we should have some segments for these videos, because just because it's a bank statement loan, all right, say you call Quicken Loans, for example, they have a lot of these brand new loan officers. They just yes them. They go through the process, and especially realtors who are referring their home buyers to, to somebody without any experience. So even though everything is case by case scenario, these are important sub segments. For example, say you use one of the questions I had in the forum was, the husband is self-employed, the wife is, a wage earner. Does the bank statement, the direct deposit is the net paycheck, but can you use the gross pay? You know what I mean? There's a lot of
Yeah,
these
so-
little variables.
I can
some
answer
banks,
that
yeah,
right now.
the banks will allow the wife to be on there, but they're going to back it
Yeah.
out of the deposit.
They're
part.
gonna back it out.
Yeah, they're going to back it out and treat it separately. Yes, they'll use the gross if they're W-2. Yeah, they'll use it. If she's
They'll use the
1099,
W-2 earnings like normal, and they'll back out the net deposits and figure out what the husband's self-employed income
Yeah.
is.
So let me tell you something. Let me give you an example. So most banks won't do 1 year self-employed. And we have one that will do one if you have been doing the same career and then you start your own business in the exact same career, and your business has only been open for 1 year. So most banks won't do that. Most banks won't go over 15 acres. Some will go up to 35. Not many will go over 35 acres. So some are 45. I mean, but not many. So we have to find that. So manufactured home, we only have one investor who'll do a manufactured home, maybe two investors. So manufactured homes, acreage. If you're into Chapter 13, no one, there's only one bank that does those. There's so many different little loopholes that some banks do this, some banks do this. And if you happen to have 3 of those combinations, we can't do it because we have one that does this one does this one, and one does the other one, but not all 3. So what I do is I interview people very, very in detail. And then I make sure that the rep understands all my questions and all the things from my experience of being a loan officer, and say, does this fit in your program? And they know their programs, and they go and they read and they say, oh my gosh, we don't do that. And that's what you have to do with these loans. I can't tell you on the phone 100% unless you're very vanilla. Own a business for 10 years. You got $1 million in deposits per month. You got an 800 credit score. You're buying a single family home for 500,000. You got 30% down. I don't need to ask anybody anything on that. But you start getting into these weird scenarios about bankrupt.
Alex, what's the
being
minimum down payment? What's the minimum down payment on a bank statement loan? 10%?
So right now, above 720, I can do 10% down, but that's getting tougher and tougher. A lot of investors change it to 15% down, but there are still a couple that do 10%. So these things are always changing too.
It's a moving target. It's always changing.
Okay.
Yeah, and here's another thing. Here's another thing you have to know. If your income's declining, they're not going to use it. So if you deposited 30,000 in January and now you're depositing 5, they're not going to do it. Even though your average is 20, they're not going to use it because your income's declining. They see it. So that's another reason why they'll deny you. So there's a lot of little things that you have to know to ask the borrower, or look at the documents when you get it and then run it by your reps. And then you got to be very careful pricing these loans and making sure.
Let me add something there. Something nice that a lot of our banks will do, or a lot of our underwriters, is if you get the bank statements, obviously we're going to look at them ourselves and do our best to determine what the qualifying income is. But we can also send them into the bank themselves, and they will pre-qualify your income specifically. Right. So you're looking in the right space if you're out looking to buy a house.
Right.
Right. Hey, Dale, I think, you used to do a lot of bank statement loans, I remember. By the way, Dale, when I first started the business, Dale was my mentor. He really went above and beyond training me and, my processor at that time. And, I always think about Dale. So that's why a lot of times I, refer my questions to Dale. He might not know it all, but believe me, he will find out the answer. He don't talk out of his ass. Now, one of the things that, we should do is, this bank statement loan is such a big, broad topic. A lot of people, a lot of loan officers especially, they think, okay, it's a bank statement loan, 12 months deposits only. We don't care about the withdrawals. Okay, that's what we use. No, it's it's very tricky because you can have a lot of variables. All right. Alex still did not answer the question. 1099 employees. Okay. I mean, I have the answers, by the way, but I'm asking questions. Even if our viewers, I know you guys are thinking this thing, so there's a lot of trick. Now, bank statement loan, there's a big difference between 10% down payment, 15%, 20% down payment, and 25% down payment. And the big difference is rates. If you got great rates, okay, I mean, if you got a real high credit score in a 720 credit score, even though you're eligible for a 10% down payment, but say you got 25% down payment, your rates are going to be substantially lower. I mean, big time lower. You might even be lower than a conventional loan, investment property. Remember, okay. So, and also another. I know I'm all over the map here. Also, I want to talk about basement for a primary home loan, second home loan, and investment property loan. By the way, Dale, you and I, we should go in the forum and answer a lot of these questions because otherwise we'll be on video for a freaking half the day here. So.
Absolutely, I'll do that. Alex, I think if you don't mind, you should put your interview questions in the forum to give people an idea like what they're going to have to answer.
Yeah. So, I mean, there's a lot of variables. You got to be careful posting guidelines on this because they might fit 5 things perfectly, but there's that one thing that's qualified. So I don't like to say we can do this because they might have something else that disqualifies them.
That's a good statement. That's a real great statement, Alex.
They're very complicated loans. There's always something.
These are not.
Gus, it's a rule. Yeah. You find out in underwriting.
No. There's no such. Okay, remember, one key thing is this: these bank statement loans, they fall under non-qualified mortgages, which is non-QM. Okay, what that means is there's no agency guideline. All right. So every lender, wholesale lender, investor can have their own rules and regulations concerning whether they're going to take it or not. One investor might say, yeah, not a problem. Another investor is going to say, are you freaking nuts? Okay. So what that said is they are, it's pretty much like a, plug and play kind of deal. You know what I mean? Where, every deal is different. What we're going to post on the forum is that it is possible, and that it can be done, but that doesn't mean that every single non-QM wholesale lender is able to do it. A lot of times when Alex talks about that, he literally calls 100 different wholesale lenders. He does, okay? He's, I don't want to say it on video, but he's a one-off, okay? Not good away, all right? So he won't take no for an answer, and and just because one wholesale investor says yes one day, they can always change their mind. So please do not take us for granted. The things that we tell you for a fact is when we have over 50% of our wholesale investors saying yes to. You know what I mean? Everything is pretty much arbitrary, and there's no set answer to this.
Yeah, we have some that will do rural, some that won't. Some will do in Chapter 13, some that won't. Some will do 35 acres, some that won't. Some will let you have disputes on your credit, that some that won't. Some that will let you have mortgage late, some that won't. So we have to find out your whole story and make sure that flow chart of all about the questions we ask you fit into some kind of profile, because never that one thing.
On the surface, we speak like in general terms, which for the most part, you're 100% right. Everybody's situation is unique, but generally speaking, 50% expense factor, 80 LTV is pretty safe. You know what I mean? This FICO score, that many reserves, this many trade lines, how far, there's a lot of things. And that's why, like what you said earlier, Alex, it's very important to spend the right amount of time up front asking all the questions so we can help you, direct you to the right spot.
And our non-QM only goes down to 620 on a bank statement loan, but our non-QM goes down to like 550 on a full doc loan. So you need a 620 to do a bank statement loan, which is probably going to require 25 to 30% down with maybe a 12% rate right now, for example.
Everybody's rate sensitive right now. A lot of people, just the public in general, all right, especially realtors, okay, with all due respect, some of your realtors, you guys talk out of your asses here. Okay, don't assume because it's a non-QM that you have to go conventional or govy or because they offer the lowest rates. That is not correct. If you have a very high score and you put skin in the game, which is down payment, you can get a lower mortgage rate on a bank statement loan or a non-QM loan, than you can on an conventional investment property conventional loan.
That's true.
That is correct.
On investment
Can
loans,
I-
non-QM can be cheaper than Fannie and Freddie.
Yeah, but let me add something here about the value of a bank statement loan. Let me give you an example of a deal I closed a couple of years ago. Truck driver, small business, had two guys working for him, wanted to buy an $800,000 house and wanted the conventional interest rate. I went and met with the guy face to face and I said, show me your tax returns. I went to the Schedule C and line 31 showed a net profit of $22,000 a year. You can't buy anything with $22,000 a year. So I told him, I said, you need to report, if you want to buy and get these conventional rates at 3%, then you need to be showing this amount in income. But then there's a tax consequence that comes with that. So he weighed it out, and obviously he stuck with the bank statement program and felt it was more beneficial for him to continue to write off as much as he was writing off on his taxes, even though he was paying a slightly higher rate, about 2% above the market. But a lot of these guys, listen, if I was self-employed, I would write everything off and do a bank statement loan.
Yeah.
It's a tax shelter for a self-employed borrower. It allows you to leverage the cash flow from your business to qualify for a mortgage.
Okay, let's talk about closing a bank statement loan or a non-QM loan under an LLC versus compare and contrast, government loans versus non-QM loans.
So Gus, the only time you can use an LLC is for business purposes.
No. The
Yeah,
only time you can close an LLC when you're buying a house is if that LLC was created purely for properties. You can't have an LLC.
Alex, that's business purpose.
Right, but it has
an investment purpose. You don't want to. I suggest, I used to own tons of properties. I have 3,000 residential units. All right. The right way for you to do is even though you have an LLC for your business, don't commingle your new purchase on an investment property, like I say, an apartment building or whatever, investment property home, okay, with your current LLC. Open up a brand new LLC for that individual property, close it under that name. So in the event of shit hits the fan, guess what? Everything's not commingled. Okay, you're just liable for that particular property. You know what I mean? And you can close.
That's a really good point. And a lot of people name the LLC the address of the property.
Well, I used to too. Like for example, 814 Properties, or 213 Development Group, because it was,
right.
The address of the property. All right. Yeah. Because if you have other properties in that LLC, if somebody does a slip and fall, okay, your insurance doesn't cover it, they're going to come after your other assets. But if it's just limited to your investment property, all right, you can only do an LLC on an investment property, 1 to 4 units, or an apartment building, or, for their individual property. They can't touch anything, above and beyond that property's wheelhouse, so.
That'd be a great topic for another video, just talking about LLC business purpose loans.
Well, I think we're going to need like an accountant or a CPA. I don't want to be like Alex and get in trouble for imitating a CPA. No, that was a joke, by the way. Okay. So.
Unbelievable.
What do you mean unbelievable? Okay, it is believable, but go ahead.
All
right. Are we done here? Is that?
Yeah, I think we covered a lot here without, overwhelming people. But I will post something on the forum about what we spoke about today, generally speaking. But hey, if you're self-employed, you need to contact us and ask us a question so we can place you in the right spot.
Okay, let me ask you guys one last question here. Can a realtor, we run into a lot of realtor, qualify for a bank statement loan? They work for RE/MAX, they get a 1099, or a loan officer, for example, all right, they are paid on commission, but they're paid via W-2, you know, so you guys have the answers to that, how the general wholesale lender view that, because that's a big part of our audience, you know, and a lot of people don't want to ask this because they're just assume that they should know the answer, which they don't, you know.
No, you can do it. You can do that. But why would you, if you were W-2, you wouldn't want to do a bank statement loan because your taxes are taken out and your deposits are less than the gross that the underwriter would use if you just show the W-2. So that would make sense.
The thing it says, if they show big deposits in their bank statement and it's the last 12 months versus 24 months bank statement, that's going to make sense, you know? You understand?
If they had a really good recent year, but a bad year.
That's what I'm talking about. Well, that's what's happening. That's what's, that's what's going to happen, Nostradamus, you know, because right now, a lot of loan officers, realtors are having a real bad year. It's not if, but it's when, and hopefully it'll come sooner than later. They're going to have a killer year. They might not qualify for a home or an investment property, you know, if you average the 2 years, but they may qualify for a bank statement loan because the market has changed around, you know.
Well, Gus, to your 1099, a 1099 realtor can do a bank statement loan. They can also do a 1099 program too.
Right. Okay. You're right. Then we got the 1099 program. How about the loan officer? All loan officer, no, I mean, in half the states, they got to get paid W-2, you know, so that would they qualify within that? Car salesman too is an example. People that are on commission, but because due to the IRS rules and regs, okay, they have to be paid like an employee and be treated like an employee, which they're really not. They're commissioned, you know.
Well, for example, I think if rates went to 30% and the underwriter knew the mortgage broker had no business at all going on, they wouldn't look at the last 12 months business deposits at all. They'd probably say we don't want to touch any mortgage brokers right now. So that's probably
that's happening.
Yeah, the underwriters but say,
what if rates go to 5%? You know, go ahead.
Then it'd be fine. But the underwriter's going to make a call that they know the industry is dying and probably say, we're not going to do this because last year was incredible, but right now we know you're not making any money. So going forward, we don't think you're going to make this kind of money. They can make that call.
Yeah, they'll make it. That's absolutely right. They can make a discretionary call just on the industry as a whole. We've got some lenders out there. They look at areas of the country aside from the industry, but they also look at areas where there's declining property values, and they'll pull the loan to value down.
Yep.
Oh, that's not just statewide. That's on the county and even the city. People don't even want to touch Detroit right now. I know tons of investors that don't, you know, they don't want to touch the south side or the west side of Chicago, you know, and that is their right to do that, especially private money or hard money lenders, you know, if they're scared of getting out of their freaking car at 7 o'clock on a weeknight when, you know, because of their safety, they're not going to freaking lend money down there, you know.
Yeah, they'll find a reason to not do it.
Well, they'll tell you right off the bat, hey, I don't want it, man. I'm scared of my life. I don't want to get shot. You know, that's not illegal for a lender to refuse a deal because of their own reasons. That is their own type of overlay they have. It's called chicken shit, you know, whatever.
All right, I think we covered bank statement loans. If you guys have any questions, please add comments to YouTube for us or give us a call. Our phone number is going to be all over the video. So if you guys have any questions, anytime, we're always available 7 days a week, day and night. And please like and subscribe. It helps us help you. Please like and subscribe. It helps us help you guys. Thank you very much.
Angela, I want us, the staff,